Hello, I'm David Mandy, president of O&M Partners. I want to welcome everyone today to the Mako Mining Corp Town Hall call. Mako trades on the TSX Venture under the symbol MKO, and they also have an OTX listing, MAKOF. For you, those of you that are new to the O&M Partners broadcast, just wanted to just give you a quick introduction to that. We're a little background. O&M, we're in the business of bringing public companies and investors together. The information presented is already publicly available. We're hoping this broadcast will help clarify context and help you make a much better informed and wiser investment decision. Before we turn to our host today, Akiba Leisman and also Cesar Gonzalez, we're going to start with an introduction from the macro side from David Hunter, who indeed is a chief macro strategist at Contrarian Macro Advisors. David's been in the investment business for 25 years, but his experience, 18 of those years, he was a sell-side strategist with focused on macroeconomic analysis and portfolio management. His capabilities to really understand the macro side combined with his contrarian philosophies allowed him to forecast economic cycles very successfully, spot market trends, and end up well ahead of consensus general opinion. He's very intellectually, he's very honest, independent thinker. He's comfortable with charting a course apart from the crowd, and I don't think there's that we're all going to need to do that in the coming months. So on that note, I'm going to turn the call over to David Hunter.
Thanks for that introduction, and be glad to kind of run through what I see for gold in the next several months ahead, and then over the course of the next several years. I do think gold is just beginning to come into its own after having what was a 7-year consolidation. Obviously, it ran into its highs back in 2011, had a big sell-off from there, and then kind of went sideways for 7 years. And we're just emerging from that. I mean, gold's had a nice run since last May. And is correcting some of that run here, but I think has another leg up of upside here in the next several months. The miners, which got slammed over the course of the last several days with the bear market we're in, I do think that we're coming to an end of that, and I am pretty optimistic about the move from here through the summer. I think miners have lagged the price of gold, and frankly, silver miners have also lagged, and I think you're going to see some catch up in both those groups over the course of the next 6 months. So it's been a frustrating group for a while, but I think we may finally reap some benefits. My reasoning for my views in terms of being bullish near term for gold and silver and bullish for the miners is basically that they were so out of favor, and technically they're in consolidations that they're going to emerge from here in the next month. And I think over the course of the next several months, what you're going to see is all kinds of money coming into the system to try to keep the economy intact. Obviously, with the coronavirus situation, we have a global economy that's, number one, suffering from the shutdown in China, and number two, the spread of the coronavirus across the globe. So I think, given the leverage in the system, there's real risk out there, and I frankly don't think the central banks, including the Fed, are nearly up to speed in terms of the magnitude of what they need to do, magnitude of the risks that we're facing, and the magnitude of the required money that they're going to have to pump to just keep things intact. You know, the narrative out there is that the Fed printed so much money this cycle that they really should not be printing anymore. It's, you know, people are very turned off to that. And I think Jay Powell has bought into that narrative. I think it's a very wrong narrative. I think before we're done, ultimately, we are going to see a global bust later this year. And I think it's going to require a balance sheet that grows from something just over 4 trillion Fed balance sheet to something over 20 trillion. We've got a highly leveraged economy with 250 trillion in debt and quadrillions in derivatives, and that's going to cause an unwind here that the likes of which we've never seen. So I call it a bust to contrast it from a depression, because I think it's going to be fast. You know, it's not going to be a drawn out depression like we saw in the Great Depression. It's going to be something more akin to 2008-9, except much steeper and with a lot more financial calamity. I do think we're going to see the start of a financial meltdown, and just how fast do the central banks come in and stop that? Now, you may think we're in that now. It feels like it in the last few days. I do think they're going to stop this here. It won't take nearly that kind of money, but they'll be putting a lot of measures in here to kind of offset what's happened. And in the short run, I think it's going to trigger a final bull leg in the stock market. You could see the stock market, believe it or not, go from this 2,400 area back up to maybe 4,000, and I think that will be a secular top that may not be revisited for a couple decades. And the reason for that is the next cycle, as a result of all the money that will be printed during the bust, we will jumpstart an inflation cycle, the first true inflation cycle since the 1970s. Anybody that's familiar with the 70s knows that gold
period after
will be,
this.
so say 2021, second half of 2021, maybe on through to late in the decade. I think gold and silver miners will be some of your biggest winners, maybe even the biggest winners in the entire market. And I think commodities in general will thrive during that cycle. It will mean inflation moving from negative. We'll have deflation in this bust, move from negative inflation to something back. I think we may retrace the entire move back to the highs of inflation in the early 80s. So it's going to be quite a run, and I think gold will be in the sweet spot of that. So I think miners will do very well. I'm predicting gold will probably top out in the low 2000s in this cycle before the bust, meaning between now and say Labor Day, and then in the bust could retrace a good part of what we're seeing now. Might get down towards 1,000, and then post bust in the second half of 2021 and beyond. I believe we're probably looking at something in excess of $10,000 on gold. So it'll move steadily through the decade. Silver, I think, can move short term up to 26, meaning between now and Labor Day, and move back down probably low teens into the single digits during the bust, and then make a run during the inflationary recovery cycle where it takes it up to 300 plus. So both metals, I think, are going to be in for big runs, and obviously the miners will be huge beneficiaries of that. Many of them will probably multiply 20-fold and more. So should be an exciting time. I think energy will also play in the inflationary 2020s. And the reason the market will not get nearly back to its secular peak is simply because you're going to have interest rates moving up with inflation, and PE multiples will be compressed. So you're going to see a lot of money coming out of index funds, coming out of passive funds, coming out of bonds, coming out of defensive areas, and trying to find areas where returns are keeping up with inflation, and the metals and mining area will be probably at the top of that list. So should be a fun time. Also be, I think, an exciting time in the investment banking arena.
Hello.
As a lot of new mining companies
Is this the conference?
come to
Yeah,
market.
please mute yourself.
You know, with
Okay, I
higher
will.
prices, there'll be a lot
Thank you.
more ability to mine some of the areas that have not been economical. So I think certainly the next decade's going to be a lot of fun. We just got to get through what I think is going to be a rough patch later this year. So thank you very much, and I welcome any phone calls or emails. I do have a investment letter called the Contrarian Value Advisor. It's basically a macro letter where you'll see more of what I've talked about here. So thank you.
Thank you, David. Appreciate very much. Giving us some background. David Hunter, Chief Macro Strategist at the Contrarian Macro Advisors. Before we turn to our hosts, I just want to say that we'd like to answer all your questions. So please feel free to chat in your question during the webinar through the question pane of GoToWebinar, or just email us. We'll try to get back during the call to all your questions. If not, we'll be back to you after the call. It's a pleasure to introduce the Chief Executive Officer of Mako, Akiba Leisman, today. Akiba serves as the Director and the CEO of Mako. He was integral in the formation of it. As head of Marlin Gold, he led the company through the spin out of Sailfish and the merger of Marlin with Golden Rain to form Mako. Akiba is also a consultant at Wexford Capital, where he oversees the precious metals public and private equity portfolios. Trained as a chemical engineer, a born and bred New Yorker, and formerly a senior analyst at Red Kite Capital Management for mine finance funds, where he was involved with senior secured investments on metal and mining assets. We're also pleased to have Cesar on the line with us. Cesar's the Vice President of Corporate Development for Mako Mining. He previously was also at Marlin Gold and served as a Director and VP of Corporate Development for them. Cesar is also a consultant at Wexford Capital, where he co-manages the precious metals public and private equity portfolio. He worked at Lehman Brothers previously. Cesar is originally from Southern California and maintains very much that he misses it. Great to have everyone on the call today. I would turn the call right over to Akiba.
All right, great. And is the presentation up on the screen?
All good.
All right. Exciting times. We just had the worst day in the general equity markets since the '87 crash. So normally I like to leave the questions to the end of the presentation, but please feel free to interrupt me at any point in time. Cesar and I actually have a unique background in the gold mining space, is that our day jobs used to be working for a very sophisticated macro hedge fund, who's also the controlling shareholder of Mako. So we have very specific views on what's going on with the virus, what's going on in terms of the economy, and then probably we are amongst I would consider ourselves amongst the greatest experts within the inner structural workings of the junior gold mining universe. So if anybody has any questions in terms of what the hell happened over the last 3 days, by all means, feel free to ask away. But let me start a little bit about where we are over at Mako. The way that I like to describe it to investors is that we're working on 3 things in northern Nicaragua. The first, we are in the midst of building what will be the highest grade open pit only mine in the world. We expect in situ grades of this deposit to be somewhere in the neighborhood of about 10 grams per ton. There's going to be some mining dilution associated with that, and I'll walk you through some of the technical reasons for that. But we expect to be delivering to our mill at somewhere in the neighborhood of between 9 and 9.5 grams. Now, we have started mining about 2.5 weeks ago. We are about 60% done building our plant. So you can imagine dealing with all the logistics across the world of getting our main capital equipments ordered, procured, constructed, and sent to Central America in order to build this mine. So the people on the ground are doing yeoman's work in making sure what will initially be a 500 ton per day operation gets up and running, and we're still on target for first gold pour in the late summer of this calendar year, albeit we have started mining for nearly 3 weeks now. The second thing that we're working on is that we made a discovery directly to the south of this deposit, an area called Las Conchitas. So our primary mine is called San Albino. So as the crow flies, about 4 kilometers to the south, we found very similar material to the mine. In fact, we put out some pretty extraordinary drill results last week where we hit 1 ounce intercepts over 3 meters true width. And these particular hits were situated in the high 50 to low 60 meters from surface. But this particular vein structure nearly daylights if you move back a little bit further to the south from where these holes were. So our expectations is that now that we're going to be drilling this new discovery, we'll be in a position to put out a maiden resource on that next year, next calendar year. Show the potential for integrated economics between our Las Conchitas discovery and our San Albino mine to mine it at 1,000 tons a day. And if the grades hold up to what we expect them to be, which is roughly similar to what we have over at San Albino, that'll equate to somewhere between 90 and 100,000 ounces a year. But again, it's pretty early days for that. And then thirdly, we do believe that we're sitting on a orogenic gold mining camp. And why this becomes important is that in this part of Central America, this is a very distinct geology from some of our neighbors. This type of geology is more akin to what you find in northern Canada or Western Australia. And the reason why this becomes important is that these types of systems, it's not unusual to find tens of millions of ounces when all is said and done. We're not geologically constrained by some of these small scale volcanic hosted epithermal deposits that you find elsewhere in Central America. We are looking for the big prize over here. So we're starting small at a 500 ton per day facility. We have a very clear path towards getting that up to 1,000 tons a day, starting to mine at that level by 2022. And then the real big boy prize over here is to find and to prove out that this orogenic gold mining camp actually does exist. Now, we would not be able to do this if it wasn't for the fact that this company is backstopped by a very sophisticated hedge fund and private equity group called Wexford Capital, which currently owns just under 56% of the outstanding stock over at Mako. To fund the majority of the capital initially to build the project and begin mining, we raised US $20 million in the form, so Canadian $27 million in the form of a rights offering that was fully backstopped by Wexford in July of last year. That was just a couple of months before I took over as full-time CEO of this company. And then to complete the financing required to build this operation, Wexford Wexford funded a US $15 million unsecured term loan that should get us to first production in August of this year. So a little bit about who we are. I took over as interim CEO of this company just over a year ago, and as full-time CEO in August. Our COO, Jesse Munoz, has been building small-scale mines in the Americas going back since the 1980s, working for companies and then working for an engineering, procurement, and construction management firm, which his family used to own. And Caesar has been my partner over at Wexford Capital, and he is our VP of Corporate Development over at Mako. The current share structure of the company, we have 583 million shares outstanding. Nearly 80% of those shares were issued in the form of that backstop rights offering at Canadian 10 cents a share. Now, the reason why this becomes important is that in and around that time, I went out into the open market and purchased shares in and around Canadian 10 cents a share, because remember, My background and Caesar's background is in equity trading for the junior gold mining space. And lo and behold, almost immediately after we bought that at Canadian 10 cents a share, the stock proceeded to more than quadruple at its highs. Today, I will file in, as soon as I get off this call, as soon as I remember how SETI works, I filed the first purchase of additional shares in the open market. So it was about 25% of the volume today at Canadian 29 cents a share. And I could tell you the only reason why I would put my personal capital behind this company in the purchase of additional shares is for one reason, and that's because I believe the stock is going up. Unfortunately, my screen just
There we go.
excellent.
Thank you.
All right, so these are some highlighted holes that we hit over the course of the last year. This doesn't actually include the last drill result that we put out a week or so ago, where we hit 3-meter wide ounce intercepts between 56 and 63 meters from surface over at Las Conchitas. Additionally, at Las Conchitas, here we hit an ounce and actually nearly 2-ounce material over 1.4 meters. That was also situated within open pit mining distances. And then some of these infill drill results that we hit over at San Albino, 1.5 ounce material over 2 meters true width, 2-ounce material over 2 meters true width. This is an open pit mine. We are mining ore as we speak today. So this is not in the future in terms of where we actually intend to be mining these grades and these thicknesses, but rather this is material that we're in the process of mining and stockpiling as we speak. To our knowledge, we do not know of any other open pit only mining mine or project globally that have consistent grades like this across multiple deposits within our property, and that includes the San Albino mine, where we're now on our 20,000th meter of an infill program over the course of the last year, as well as our Las Conchitas exploration asset to the south. So a little bit about what San Albino is. So San Albino, the last time that it was put into commercial production was in the mid-1920s. A US businessman started operations, and then his general manager was a very famous person in Nicaragua. His name was Augusto Sandino. And then six weeks into the operations of this mine, he hijacked the mine, stole all the gold, and then used it to fund the initial Nicaraguan revolution. So Augusto Sandino is a folk legend within Nicaragua. It is the Augusto Sandino International Airport. The namesake of the Sandinistas comes from Sandino, the ruling party in Nicaragua. Is the FSLN, which is the new Sandinista government. So it is a very, very important, he's a very, very important individual. And all of Nicaragua, whether you are reformer or Sandinista, whether you're Catholic or Protestant, everybody is very proud that this operation is going to be up and running in a commercial fashion for the very first time since the late 1920s. Elsewhere in Nicaragua, there are 3 commercial operations, 2 of them that were formerly owned by B2 Gold, currently owned by Calibre. They're all at least 3 hours of driving distance away from us. And again, very, very different types of geology than what we have over at San Albino. Nicaragua is safe. It's fairly easy to get to. We're actually in the middle of transporting our mill from a port in Honduras and taking it over road to our mine. We've sent equipment to the port of Managua as well, and it's not difficult to get equipment in and out. The country is safe from a personal security perspective. We're in the process of closing down and reclaiming a mine in Mexico. Mexico has gotten to the point where it's not a safe jurisdiction from a mining jurisdiction, so you can't really walk around at night over in Mexico. You can over in Nicaragua. Now, in terms of where we are and what we've done since the last time that there were reported economics on this asset. So in 2015, a PEA was put together. There's a long history that included our involvement with this company going back since 2014. But it was a little bit of a dysfunctional relationship between the two predecessor companies of Mako, Marlin Gold Mining and Golden Rain Resources. So while we had actually had quite a bit of input on the capex involved in this mine itself, we had actually very little input in the overall resource development and geological model that formed the basis of that resource. So this, first of all, on the capital, that $21.1 million. If you were comparing this on an apples to apples basis, that number really went up to about $25.5 million. And principally the difference was a scope change in terms of how we're managing the tailings facility over here. So we're using top of the line filtered tailings and a dry stack storage facility over here that took the capex up to 25.5. But then more importantly, the in situ grade of this deposit, where it shows on an overall basis, it was about 8 grams. And then the indicated category, the vast majority of which was the open pit resource, was 7 grams. Now, we have completely redone the geological model. We have had independent reviews of the geostatistics, and there's no question in our mind that the grade in situ of this deposit will be pushing somewhere in the neighborhood of about 10 grams a ton. Now, this is a very unique ore body where it's a relatively shallow lying system. And therefore, in order to mine this in an open pit fashion, especially with some of these narrow veins, you will be taking mining dilution associated with it. So you will be taking waste material alongside your primary ore. And in doing that, the head grade will be somewhat less than 10 grams. But our expectation is that when this mill turns on, we're going to be delivering to the mill somewhere in the neighborhood of about 9 to 9.5 grams. And if that's the case, based on our expected recoveries for this deposit, we would be producing in the high 40,000, maybe even low 50,000 ounce range when this is fully operational at 500 tons a day. And again, our plant is about 60% built at this point. We're going to start dry commissioning in late June and first gold pour in late August, and then commercial production shortly thereafter. So all of these numbers right now are in the process of being revised. We've hired an outside group out of Reno called MDA to start taking a look at an updated resource model. They've been extremely impressed with the work that our team has put in. And I could say pretty unequivocally that the geostatistics of this deposit are fantastic. This is not a nuggety deposit where you have data that's skewing this to a very high grade. There is coarse gold in this deposit, so it's everybody needs to be cognizant of that, both in terms of how you estimate the grade in the resource and on how you deal with it metallurgically. But this is not like a pretium situation where they can estimate in a unique way a certain grade, and then the reality is a grade that will be 30, 40, 50% less than what they were initially modeling over a deposit like that. So for instance, pretium had a multiple coefficient of variation on their geostatistics over here, so that the standard deviation divided by the mean of the deposit. Our coefficient of variation is less than 1.5 to 1, which is unheard of for a coarse gold vein-based deposit. So very, very well-behaved geostatistics, and we're very, very comfortable that the in-situ grade of this deposit will be somewhere in the neighborhood of 10 grams. How well we mine it is still an open question, but we're learning about how to mine this every day, certainly for the last 3 weeks when we started the mine at site. So a little bit about our deposit relative to some of the others, not to compare in terms of size and scope, but just look at the grade over here for some of these first quartile mines. These are the highest grade open pit only mines that we can find around the world, at least that are owned by public companies. And you can see these deep first quartile mines that have C1 cash costs in the $200, $300, $400 range, all have grades roughly half of what we're mining right now. So we truly are a geological anomaly in that our grades are off the charts with respect to what a normal open pit mining operation will look like. But on top of that, this is more than just a 500 ton per day operation that we're mining right now. Like I said, we've made a discovery to the south over at Las Conchitas, that blue box south of the yellow box called San Albino deposit. In December of last year, we acquired a concession called Puerto Rios on the other side of that river. I can tell you the San Albino vein continues on the other side, so we expect there to be an additional deposit over there. And then more importantly, we currently sit on 23 kilometers of basically untested strike. Now, when I say untested, there have been rock chips, grab samples, exploration pits, artisanal mining, all along the full 23 kilometers of our concession map. In fact, we know that gold mineralization continues on either side of our property. And then once we get cash flow from this mine, we can start investing for the first time doing regional geochemistry, soil samples across this, and then eventually start drilling, because our estimation is that there contains multiple San Albino type deposits elsewhere on our ground over here. And the prize is not just a 500 ton per day operation over at San Albino. It's not just 1,000 ton a day integrated economics that we're planning on to mine with Las Conchitas in 2022, but we do believe that we can find a series of these deposits across our currently 23 kilometer strike. As the from a bird's eye view of this deposit, what we are mining right now and the plant that we're going to be building that we're 60% done building is all the way in the top of the screen. Our plant infrastructure is situated just to the left of that El Jicaro River. Don't worry, the mill is situated on a platform, so it's maybe about 40 or 50 meters above the river itself. So there's no real risk of any contamination from the mill itself. And then we store our filtered tails in a dry stack in a ravine that will have really no risk to getting in the river over here. We actually, for environmental safety reasons, we're not allowed to mine within 200 meters of that river itself. So even though we know the San Albino vein continues on the other side of the river on that concession that we purchased in December, that will require a separate open pit with enough of a buffer zone between the San Albino mine over here and then the Puerto Rios eventual mine that hopefully we'll be able to prove out in the coming years. Las Conchitas is 4 kilometers away. As soon as we prove out a resource over there, we'll have to build about a 1.5 to 2 kilometer road to link up to the south side of the haul road over at San Albino, and then easy peasy we'll be able to connect that and truck the ore directly to our plant. All of the footings, all of the foundations have been poured for 1,000 tons a day. Our crusher is capable of handling about 1,600 tons a day if necessary. We bought 2 500-ton per day mills that are currently in Honduras and should get our mine over the course of the next week and a half or two. So when we are ready to be mining this at 1,000 tons a day, we do have the infrastructure in place that could be accommodating it. Now, the reason why we're so off the charts when it comes to grade over here is actually not for geological reasons. I can name 10 other deposits around the world, quartz vein hosted orogenic narrow vein systems that frankly have higher grades than what we do. So a good example is up in Canada, Kirkland Lake's Macassa mine. So their Kirkland Lake asset, the namesake of the company. If you actually look at what that is, it's a narrow vein quartz where most of the gold is contained, an orogenic system where the vein basically goes down to the center of the earth. When you're in the quartz vein, you're probably at Macassa grading somewhere around an ounce material, and then you have a mineralized footwall and hanging wall around that vein that takes the diluted grade down to 22, 23, 24 grams, somewhere along those lines. But it's vertical. It basically is a vein that goes straight down to the center of the earth. For us, when you're in our quartz vein, you're grading somewhere around 15, 16, 17 grams. So about half of what Kirkland Lake has over at Macassa. And then you have a mineralized hanging wall and footwall zone that takes the overall grade down to about 10, the in situ grade that I was talking about earlier. So in effect, we basically are half as good as what Macassa is over at Kirkland Lake. I use that as an example just to show that what we have here is actually not unique. What makes this unique and unlike Kirkland Lake and unlike any mine or project around the world is that 80 some odd million years ago, the deposit tilted on its side by 65 to 80 degrees, and it makes it amenable to open pit mining. So instead of putting hundreds of millions, if not billions of dollars of capital, both plant as well as underground development capital to get an underground mine operational, we can actually access these relatively shallow lying ore bodies from surface through an open pit mine. So instead of spending hundreds of millions of dollars, we can spend $30 million to get our mine up and running. Now, with that, because I actually wanted to leave quite a bit of time for Q&A today, so glad to answer any questions about Mako. Glad to answer any questions about the crazy markets generally, and then more specifically on the gold side. So with that, I'll open it up to any questions right now.
Thanks, Akiba. Very well presented. Sorry for the disruption, everyone, but thankfully everyone stayed on the line with us, which we appreciate. All right, we'll start with Andy Carruthers. Andy, do you have any questions today?
David, before we go into the general questions, Akiba, do you want to go over our contingency planning for coronavirus?
Yeah, sure. So, so a couple of, I guess nearly 2 weeks ago, we started to discuss plans for how we're going to be dealing with COVID-19. So in terms of just health and safety for our people on the ground itself, so this is in Nicaragua, specifically Nueva Segovia. We found an isolation center, an appropriate one, in the capital city of Nueva Segovia, Ocotal, which is about a 40-mile drive from the mine. So it's about an hour 15 away from our facility. We have an ambulance that has a segregated cab for the driver, who's been trained in handling infected patients, and they have a safe cabin in the back, isolated for any patient that may come there. We have a segregated container where we can hold somebody for 24 hours in isolation until an ambulance picks them up and puts them in isolation over in Ocotal. All of the hygiene has been stepped up immensely at the mine itself. So we are disinfecting everything. Obviously, everybody is using best practices with respect to hand washing, and making sure that we keep everything under control as best as we can. So just a little bit about the layout of Mako. So Caesar and I generally work from home when we're not traveling. Me in New York City, and then Caesar in just outside of Kansas City, in Kansas. And our operating team in the United States is based in Tucson, Arizona. We have a few members of the team that are kind of transitional between our Mexican operation and Nicaragua. So we've decided to start. Caesar and I have been working from home for even before the virus outbreak, but we've decided to take all the Tucson employees, and they're going to be working from home from now on. We've eliminated all non-essential travel, and that's for me, for investors, or anything like that until this passes over. And then we're trying to extend as great as possible the shifts that we have for our expats, which are principally American and Mexican, just to limit the amount of essential travel that are going to be coming back and forth from Mexico and Nicaragua and the United States and Nicaragua. Right now, we haven't had any material delays to our capital deliveries, but I think everybody's antennae are up at the border right now, principally to protect against people coming across. So freight and commerce eventually will get through. But I have to tell you, like, if we were building this project 3 or 4 months behind where we are right now, I think there would be some material delays on how we were going to be building this thing in terms of capital procurement and then actually getting over the border. Luckily for us, that mill, which has frankly been delayed probably about a week because of enhanced border control. That's probably the biggest delay that we've experienced, at least logistically at the project level. My guess is that if we were still in the process of procuring that crusher now, there would have been some more material delays to the project itself. We've been getting consumables pretty regularly. We don't really have any foreseeable issues with that. So this has become a priority and a focus for us. I think we're in a little bit of an advantage situation, principally because we started building this last summer. I think that's our biggest advantage. And then also, we're not really a fly-in, fly-out operation. This is in a country that has where most of our people are based there. Our workers are all really come from 95% of them are from a 40-mile radius of our mine, and from the people that are in either Managua, and then for a select group of supervisors from Mexico and the United States, there will be some changes on schedule and how we're managing personnel in that regard, but we'll get through it. So some impact in terms of people's lives, in terms of their ability to go back and forth between their family. Certainly disruption in that regard, but we'll manage through that over the course of the next year.
Thank you, Akiba. Shall we go to Q&A? Caesar, anything to add?
No, I think Akiba covered it well. We can go to the general M&A or Q&A.
Okay, we'll start with Andy Carruthers. Andy, today, questions?
Yeah, can you hear me?
Yep.
I can hear you fine.
Yeah. So how did you happen to come across this project in the beginning?
So 2009, the predecessor company to Mako was a company called Golden Rain Resources, and they picked this up from another publicly traded company called Condor in 2009. Now, Condor was the first, what I would consider a Western company to have control of this ever since it was taken over by the government in 1933. So the original Somoza dictatorship, and very little work was done from 1933 to the early parts of the 2000s. Now, when Condor had it, they were able to drill out a small resource on what we call concha material, which is really old either ore piles or waste dumps or development material, which actually grades pretty well. Like on site, it's pushing 5 gram material in terms of what we have. So they proved out a small scale resource on that, which is kind of how they built their initial company. And then they saw some adits in the ground, and they decided to follow the adits and then drill across it. And every single one of their drill holes that tried to go and intersect the vein missed. And they basically just gave up on the property, and this group called Golden Rain picked it up. Now, this was right after the financial crisis, and Golden Rain didn't have any money. So our head exploration geologist, Zoran Pudar, was doing some research online, and he found the old mine working database logs, really, were being stored in the University of Wyoming as part of this historical archive from a famous geologist that used to have it. So while he had some spare time, he asked the library to go and send some photocopies of these plans to him. So for a few $1,000s, they scanned everything and printed it out and sent it to him into a box to his Vancouver office. And then lo and behold, these adits weren't actually going into a crosscut. They were developing alongside the vein. So Condor was actually just drilling in the wrong direction. So as soon as Golden Rain had these maps and they were putting the drill holes in the right location, every single one of them hit, like pretty extensive grades. So the original Golden Rain discovery was of San Albino was really just a follow up on some historical 19-teens, 1920s plans, and Condor just drilled in the wrong direction. Now, Golden Rain was very well suited to do some initial legwork to prove this out geologically. They were not very well suited to go and develop the resource into a mineable fashion and then eventually to mine it out. So one of the predecessor companies of Mako, Marlin, entered into an agreement with them in 2014 to help develop that. It was a completely dysfunctional relationship. And then after 4.5 years of trying to merge the companies, they finally agreed to a merger in 2018. And then the rest is history, really, since we've had full control of this company from last year. It's been guns a-blazing to get the resource developed into a mineable fashion, to get the plant, 500 ton per day plant built into a mineable fashion, and then to actually start mining this thing about 3 weeks ago.
So, what percentage ownership does Wexford own today?
Just under 56%, and then they also are the sole lender of that US $15 million facility, where US $5 million has been drawn to date.
Okay, great. Thank you.
Thanks, Andy. We're going to turn to Marshall Barrow. Marshall, are you on with us? No, Marshall. Okay, Chip Richardson. Chip, are you with us?
Yes, I am.
Okay. So Chip, question and then help us out by just muting because we're really having a problem with that today. Got a question for Akiba?
Yeah. So what are the costs going to be to get the larger extra 5,000 per day? Is that going to be significant cost, or be rapid and inexpensive?
Right. So the capex to go from 500 to 1,000, so an incremental 500 tons per day, is limited in terms of equipment. So all of the foundations have been poured for 1,000. So in terms of minor adjustments to the front end of the mine, so our gravity circuit, minor adjustments to the back end over at the refinery, you're talking less than $1 million of actual equipment that needs to be put onto the plant. But that's not where the real cost will come. We will have to certainly develop the resource to a mineable level, and even just going through the exercise over at San Albino to delineate a resource and then infill it, you are talking about quite a few millions of dollars, probably in the mid to high single-digit millions of dollars of drilling to get it to that level. Then you're going to have to build a 1.5 to 2 kilometer road, which will probably be somewhere in the neighborhood of about $1 to $2 million of capital to get that up and running. And then we do not have tailings capacity even for just a 500 ton per day operation. We have enough tailings capacity for maybe 2 or 3 years at our current run rate. So we're going to need to build more tailings as sustaining capital just for the small scale, but then we'll obviously have to double that for the 1,000 tons. So inclusive of all of that, it will probably take low double-digit $1 million to get this up and running at a so let's say, for argument's sake, 12.5 is a good number, but it really is early days in terms of actually calculating what it is, but somewhere like that to kind of as a number and a frame of reference, which is a capital decision that can easily be funded through operational cash flow in terms of how much we expect to be making at these kinds of grades coming from the mine.
Thank you, Chip. Appreciate it. Thanks. We'll go to the next. Chip, do you have another question?
Well, I would like a little more color on what costs or what's been done with the Mexican operations. You guys have got that all taken care of finally. Could you give us a little color about that?
Yes, so we submitted our reclamation plan, which has been approved by the government. I think the last time that we had on our financials, we took that to just over a Canadian $6 million ARO liability, so the reclamation liability. The reality is that it will take less than $1.5 million to shut it down. The vast majority of that is for severance costs, because we've been reclaiming really from the beginning of the mining operations over there. So all of that has been funded through some receivables that we had from the government, through some third-party equipment sales. We're still in insurance litigation from a hurricane that hit us in 2018. Hopefully we'll get some from over there, but it's fairly well retained, fairly well contained, and we're going to be taking a pretty substantial write up on our ARO liability when our audited financials come out this year. In the meantime, we entered into a non-binding letter of intent to sell our Mexican operations to our neighbor. I guess they changed the name of the company. It used to be Gold Play Exploration. And then they're going through their diligence right now, and then hopefully we'll have a deal with them where we'll retain a royalty, we'll get a nominal payment, and then all the remaining tax liabilities that are involved over in Mexico will then go over to the Gold Play side of things. Those tax liabilities are completely ring-fenced. The Mexican government, I don't think, has any real intent to take over the claims as they stand today, because they're in negotiations with Gold Play on how to divvy up those payments over time. But if the Mexican government wants to take back those claims, well, we've basically, our minds have basically taken the full write down on this asset. So they're more than welcome to do that. So even though there is a relatively substantial US $5 million plus $5.5 million liability on our balance sheet for tax liabilities, Mako will never be spending a dime on that.
Very good. Appreciate the update. Thank you very much.
Thanks for your questions, Chip. We're going to turn to Chris Chipman. Chris, question today for Akiba.
Yes.
Chris, are you with us? Can you hear me?
No.
Okay, we'll mute you. I can't hear you. We'll go to Chris Mulcahy. Chris, question today?
Can you hear me, Akiba?
Yes.
Yeah, we can hear you.
Akiba, can you give me some comfort on the actual 500 ton per day mine by describing perhaps just walking me through the steps there and telling me where the strengths and weaknesses are, and how, whether that's a real robust system in place now that will generate some real cash.
Okay, so on the capex side of things, so there has been an increase to US $25.5 million to get that done. We're about 60% done building the plant itself, and I would consider ourselves basically on budget. We're actually running probably about 97% of budget right now, so maybe slightly under, but not materially so. And unless there are going to be some material delays because of the virus issues, we're still on target to getting cold commissioning in June. On top of that US 25.5, we commissioned a roughly 20,000 meter infill program to tighten up that resource, just making sure that that we can actually develop a real mine plan around a small area of the mine itself. And the data that's come back with those infill results that we've released, basically 80% of what we've gotten back at some point over the course of the next 3 weeks. We'll release the balance. over at San Albino, all of the information is kind of confirming what we thought about this. This is a very well-behaved part of the deposit, very easy to model. And then what we're mining right now is on the southwestern part of this kind of blob that you see on this screen over here. Now, the 500 ton per day in long section is going to be taking out a portion of these 4 veins all the way on the left of your screen. So you have this kind of very difficult to model vein called El Hobo, which we're actually starting to block out right now with our production rig. Underneath that is our most predictable vein called San Albino. That's the one that we spent most of that 20,000 meters of drilling to really fully understand. There's the Naranjo vein, and then eventually the Aras vein, which has some extraordinary results, albeit it looks like the Spanish took out quite a bit of it in the 18th century, but especially where we start over the San Albino vein, that is very well understood. We're anticipating that this is going to have a diluted grade, so a head grade to the mill of somewhere between 9 and 9.5 grams a ton, so roughly 0.3 troy ounces. So at these gold prices, that will equate to roughly $450 of revenue, and then net of recoveries will be roughly $400 of revenue for our ore. And then in terms of our per ton, and then in terms of our costs, it costs us roughly $2.25 to move a ton of material. We're dealing with strip ratios in the high single digits. So let's say for argument's sake, it's a 9-to-1 strip ratio. So that would be about $22.50 a ton to move a ton of ore. It will take roughly $60 a ton to process it. So let's call it, for round numbers, $85. And then you'll probably put in another $10 of G&A, and then some tax to the Nicaraguan government, as well as some sustaining capital. So on an all-in basis, inclusive of royalties, you're probably looking at a net cost of somewhere in and around $125 a ton for something that will have net of recoveries about $400 of value.
Those numbers sound great, Akiba. Now let me ask you, just fill me on. Do you have the trucks? Do you have the backhoes? Do you have the shovels? Does the crusher, is the crusher a top quality piece of equipment? You mentioned there's a couple crushers in, was it El Salvador or somewhere, that are waiting? Why are they coming in? Could you just address the production line there? Is it all either on site or about to be on site and of good quality and whatnot?
Yeah, so in terms of our fleet, we have a local contractor, and we're intentionally doing this through a contractor just to support the local community, to make sure that it's not just Mako that's responsible for this mine. So we've trained his guys on how to mine this mine, because it's actually not it's not a conventional way that we're mining this on an open pit. We have to be very, very selective on how we're mining this. So his fleet is good for the type of deposit that we have. So we have relatively small equipment. We have, I believe, 35-ton road-rated trucks. So these are like kind of smallish vehicles. But at the end of the day, we're not really going to be moving more than 6,000 or 7,000 tons of material. So that's ore and then waste development as well over the course of the next few years. So his fleet is there. We have our small scale excavators and a fleet of trucks that's more than capable of handling that production run rate. Our limiting step in terms of our capacity to do this is really the ability to block out the ore. So we do need to have a geologist in the pit, making sure that there's clear separation between what is ore and what is waste, because that's really the key objective to getting this material out of the ground. Now the crusher, so this is material right now. We're actually taking everything run of mine, so it's free digging. Eventually we're going to have to blast this material. All of that material is going to have multiple inch type specifications. They'll be going to a crusher that will take this down to roughly 3/8 of an inch.
Akiba, maybe you can show a picture from your Twitter.
No, first of all, I encourage everybody to follow me on Twitter. I'm a little bit technologically unsavvy, so I'm a little bit worried that I'm going to lose this presentation if I go to Twitter on my computer. But please follow me at Akiba Leisman on Twitter. So I do provide weekly pictures of what we're doing over here. So the crusher is actually brand new, so brand spanking new. We got that built in October, November. Got it delivered to site in December. Then after the 3/8 material that's coming from our two-stage crusher, the jaw and the cone, it's going to be sent to a ball mill, which will be grinding this to roughly 65 microns, so kind of a powder. Now those mills are old, right? So these were built in the 1984. I believe. Now, the good news about these mills is that they were used in the power generation industry. So the only thing that they touched was limestone. So in extremely good condition, and the exact types of mills that we need. The electric kit that went with it, we had it on our at our shop in Arizona for inspection. Everything works perfectly, and then they were put on the water a couple weeks ago to the port in Honduras, and then we're just kind of awaiting for it to clear customs to get it over the border. Now that everybody is kind of freaking out about what's actually let through the border these days, so hopefully that will happen imminently, if as early as tomorrow. But we shall see. Now those are two parallel 500 ton per day mills. They're relatively important to get to site, because then we can actually finish some of our casings and structure around this, so we can actually finish our plant. But right now this has not become a bottleneck, but if it's still held in customs for another couple weeks, then it may actually start delaying the project, but I don't foresee that happening. So that's.
Sorry.
Yeah, so that's and then after that, so that crushed material is then going to be sent through a gravity circuit. So there will be a centrifuge and a shaking table that will take out a substantial amount of the coarse gold from our deposits. At a minimum, a third of it is going to be recovered through gravity, but I have expectations that it's going to be higher than a third.
Akiba, I just emailed you a picture from right now. I got on the camera and I just took a snapshot from the site right now, so it's in your inbox.
All right, so let's see what does. Yeah, so and then after this, so everybody can everybody see this on the screen? So our crusher's on the top right of that the screen over there. You can kind of see our radial spreader over there, but that's part of our secondary crusher. Those are carbon and leach tanks over there. So we poured the foundations for 10 of these. We only need 5 to run a 500 ton per day facility. So those are basically complete. To the left is our laboratory. We have our geology station, as well as some of our metallurgical testing and loading unit for the lab. In the fourth screen, you have the administration building. Those tanks that are getting built right now are reagent tanks. And then you can see a lot of our water diversion channels along the hillside to make sure that when we do experience rain, the water is kept way outside of our plant area. And then that river that I was talking about before is actually on the far side of the screen. So there's a pretty steep platform over there. So we're well away from the river as we see. But you can see this is not a project that's only getting up and running. I mean, we've been building this since last May or June, and we're about 60 some odd % complete with it right now. And then once those mills are there, then that will be the last big piece of kit that we'll need on our site. And then the idea is to start cold commissioning this in June, and then first gold pour in August.
Thank you, Chris, for your questions. As always, we're going to turn just for a moment. Chuck Deed, Chuck. Chuck, do you have a question? Or you just listen only? I'm not sure today, Chuck.
Yeah, there we go. Hi, Akiba and Caesar, thanks. Good presentation. Probably just one question you asked. You answered some of it, Akiba, in regards to the capital needed to do some extensive drilling on the other projects and whatnot. But everything looks like it's kind of financed well and in process. And Caesar tells me a lot about it. It's great to have a capital partner like Wexford and own it and fund it. But I guess I just ask you if you knowing that the numbers are dilutive, because you guys are great capital managers, you've done a great job of that, and that's a real problem in the junior space, as you know. So first, kudos for doing a great job. But if you could do anything today from a small capital amount to not dilute the project, anything that you get excited about that you'd say, man, I'd like to move the dial just a little bit this further, but I might be getting ahead of myself. Maybe something in the $500,000, $1.5 million. I don't know if it's exploration. I don't know what you foresee that you haven't moved the dial on that you'd like to, in context to where you're aimed at. Is there anything that you'd say, boy, this would be the next thing we'd really like to accomplish, but we kind of got to wait before we spend on it? What would you say that?
For urgent needs, it's making sure that on the other side of that river, we've basically deferred exploration until the mine turns on. The regional stuff will be there, right? So the regional stuff, like even if we had all the money in the world, just wait until the mine turns on, and then we'll get to it. The stuff over at the Puerto Rios deposit, and actually even to the south. So just to give a little bit of a frame of reference in terms of where we are. So the Puerto Rios to the north, we were actually waiting quite a bit to acquire that, because there was a fairly extensive artisanal mining on that concession when Condor owned it. So Condor, when they sold the San Albino Murra concessions to Golden Rain, they actually kept Puerto Rios. And then when we took control of Mako, they reached out to us to see if we wanted to buy their concessions, and we did, but we did not want to get in the way of what was essentially 40 artisanal miners that may have not been too happy if we acquired those concessions and kicked them off the ground. Luckily, they left, which is actually the impetus for us executing on this area. Over here, we're going to need to work out a few deals with landowners and in terms of exploration agreements, and then eventually even owning it outright before we actually can do an extensive exploration program. If we had money to do that today, I would do that today, because that actually would influence a little bit on how we're going to be mining the first, let's call it 4 years over at San Albino. And 4 years is not a long period of time. The reason why we're actually funding the stuff over at Las Conchitas right now, to the extent that we are, is that we're still kind of in the early days of understanding the geological model over there. And then we need to figure that out, because then once we figure it out, we're going to have to attack it with a 30,000 meter infill program at a minimum to get this to a reasonable resource level. So we're using this time to figure it out, knowing full well that the next year, when after our mine turns on, that the capital will be there to infill this. If we waited on funding that kind of conceptual drilling over Las Conchitas, we would never have the time to get this up and running in terms of our internal goals of expanding production. So that was a conscientious decision, albeit a lot of our exploration over Las Conchitas has been back-end loaded to the end of the year after the mine turns on. So even that is being kind of triaged, if you will, is that in terms of we want to spend money on figuring this out, but we're not actually committing capital to doing a full-on infill program over here until we have the cash flow to do it.
Thanks for your question, Chuck. We're going to turn to Steve Rentschler now for the last question. Steve? Steve?
Hi, just two very quick ones. The first is, what was the gold price used on that 2015 PEA?
I believe they used 1250 for their numbers, but frankly, I want to make this absolutely clear. That PEA, everything about it, and from the underlying bones of it, how it was modeled, the resource estimate, the grade, to a certain extent, we had responsibility over the capital, was BS. Like, it was really put together like from a group of people that did not want to actually build this thing. So yes, that PEA was there. It has reported economics, but we only hired a third-party guy 2.5 weeks ago to start taking a look at it, because it was the first time that we were comfortable with the underlying geological model to actually start mining this thing. And it was really only after that time where we can actually put real credible numbers there. So we love to put out appropriate 43101 documents with what will be a pre-feasibility study when this comes out, probably in the latter part of this year. But everything on this piece of paper should not be taken seriously by the investing community, because it was not put together by serious people.
Okay. Well, I guess in that vein, you've got, I guess, what, about $10 million undrawn on that Wexford loan. How many weeks or months of delay can you sustain before you've used up whatever contingency you have and you have to raise more capital?
0, right? So that loan was intentionally structured as a hold your breath, tighten your belt type number. Call it an aspirational number. So if there are delay, it really depends on the reason for the delay, right? If the reason for the delay is that we're going on full bore, but our mills are caught up in customs for an extra month, whatever, that actually is a real capital expense. If our delay is because we're still trying to figure out how to mine this thing, so our throughput on the mining is less than what we expected, well, then that actually means we're spending less money on mining. So for just from a G&A perspective at the overall company level, you're probably looking at somewhere in the neighborhood of about US $350,000 a month, thereabouts, kind of somewhere in that in that range. And then you throw on top of anything that's there from our kind of capex, and inclusive of pre-production mining on top of that. So yeah, like everything that we do not budget things the way that I like to tell people on the ground. I don't believe in conservative budgeting. I believe in accurate budgeting. So everything that we deal with on the ground is our best case, and if there are delays, then those delays will need to be financed. And what that actually winds up doing is it makes people much more focused on making sure that every dollar is being spent appropriately, because they know it is a painful exercise for them to ask me for additional money, because I know it is a painful exercise for me to ask Wexford for more money, or the general markets if they were open, which they are not right now.
So if the mill is held up at the border for another month, you're going to have to raise some money, you think?
But I'm using the mill as an example. I actually don't believe the mill is going to be held up at the border.
Well, I know, but I mean, just COVID-19, whatever it is. You know?
Yeah, like for instance, if let's say our probably a better example, just because our mills are actually sitting there in the port that we're expecting them to be released literally within hours, if not days. But let's say like our cyanide supply, because our Chinese supplier can't get up and running, and for whatever reason you can't get consumables into the country, and yeah, no, those can be delays to the project. I think 4 months ago there was a lot more engineering risk to the project, where we really didn't have final answers to our design for the tailings management facility and things of the sort. There's really no like engineering delays over here. dealt with building a mine in Mexico with some pretty extraordinary rainy seasons. There are rainy seasons in Nicaragua, so weather can happen, not nearly as extensive as Mexico. So mine development is complicated, and investors should always be prepared for delays. We try to mitigate them as much as possible, but it's certainly a risk.
Okay, that's super. Thanks very much for answering the questions.
Hey, you're welcome.
Thank you, Steve. And we're going to turn back to Scott for one question that came in that was texted in. Scott?
Yeah, hi, I have one from the audience, and it is a general market question. Akiba, could you comment on the drop in the GDXJ late Friday? Was it more than just a margin call?
Oh, I think it was a margin call. I think that margin call came from a very specific place, which was the leveraged products. So on the GDXJ, where the margin call effectively happened on Thursday, that was coming from JNUG. And the way that JNUG works, which is a triple levered vehicle, is that they enter into swap agreements that are there to replicate 3 times the daily movement on the underlying index. In the case of JNUG, it's the GDXJ. In the case of Nugget, NUGT, it's the GDX. In doing that, because of the precipitous decline in the previous days, and then specifically on Thursday, there was a margin call that was done by GDXJ, which by JNUG, that required the forcible selling of the GDXJ. And on top of that, it does look like there was a general risk-off appetite, more so than we've seen certainly since the financial crisis, and probably before then, where people just did not want to participate in the arbitrage. So normally these are ETF structures on the GDXJ. And the way that ETFs work is that there are a select group of people called authorized participants, where if there's a deviation in price between the ETF and the underlying, that the APs will go in and buy the ETF, short the underlying, submit the shares of the ETF to the trustee, and then receive the underlying back in order to complete the hedge, so the trade. So their short position will be covered through collateral that they're pulling out of the trustee. The problem with the GDXJ is that somewhere in the neighborhood of about 25 to 30% of the constituents within them are Australian based. And then normally when markets are behaving correct is that if, let's say if you're short Northern Star mining in Australia, you can hedge that with some Kirkland Lake, something like, because the correlation of it is pretty close to one another. People didn't want to take the basis risk. So there was over 1,000 basis point differential between the GDXJ and the underlying constituents that the ETF failed to work. That then kind of migrated over into the GDX on Friday, where the last half hour of trading was literally the craziest thing I've ever seen in the ETF universe, where some relatively liquid companies were just trading completely out of whack on pure arbitrage opportunities that could have been acted upon by the APs, but they chose not to because everybody was freaking out. And in doing that, the GDX went down so much that it triggered more and more margin calls, and then eventually you saw the collateral start leaking out with having its final sell-off earlier this morning. So for the people that bought in the first 5 to 10 minutes of trading today, good on you, because that was a technical gift that you were given because of the inner workings of this market. Now, I know there's been a lot of people that feel like the ETFs are not good products, and not to blame. I think the ETFs are essential for our industry. We can't ask investors to make calls as to why one gold stock is better than the other. If there is, I mean, you had David Hunter on in the beginning of this this talk. His view, whether it's now or later, 2020 or 2022, is irrelevant. But he has a macro view, and in order for a macro view to work, You need to be able to invest in a basket of these stocks in a relatively liquid fashion. I do think that there's a fundamental problem with these levered products. I think they exacerbate market moves. I don't think there's any real investor reason why they should exist. So I think when things calm down and then people are going to start pointing fingers and kind of blaming folks about what happened, not even just in our industry, but in other products as well, I think these levered ETFs are going to be a thing of the past within 6 months.
Thank you, Akiba. I think we've answered all the questions, and so I think we'll turn it back to you for closing remarks, Akiba. Great presentation.
All right, thanks. Well, yeah, no, kind of an interesting day to present, no question about it. And by the way, look, there's a lot of pain that's being felt by people across the board. I mean, this is irrespective of mortality rates for the virus, which is going to be horrible from a human perspective. This is going to have a devastating impact on the economy. The good news, so in many respects, kind of what we're going through is like the mobilization for war. But the good news is that unlike war, is that when this passes, and it will, two things are going to happen. Basically, all the infrastructure is going to be left intact, so you don't have to deal with any broken countries in that regard. And you're going to have one of the biggest forms of monetary and fiscal stimulus that's kind of coming from us on the other end. So this will be a very, very sharp V-shaped recovery. Whether that V starts at 2,300 S&P or 1,500 S&P, I don't know. So that's kind of the general market feeling that I have right now. Gold has always been a tiny part of the market, so we are the flea on the tail that's wagging the dog right now. So all the movements in gold and gold equities, frankly, you got to ignore it just because our companies are not what is driving the macro over here. So you do have to be playing this for what eventually will be the monetary inflation that will be coming at some point in time. And then specifically for Mako, we are sitting on a very special project for a whole host of reasons. Geologically, just because we are building what will be the highest grade open pit mine in the world. We do have the ability to take this from a relatively small scale operation at roughly 50,000 ounces of gold to eventually getting it to about 100,000 ounces in the not too distant future, all organically financed. And then hopefully we'll be sitting on a deposit that will have millions of ounces of gold when all is said and done. And then unlike 95% of the juniors out there, we actually have the capital that has been funded and committed to date. And then we have capital to do more, either from the 56% shareholder or more ideally from the mine itself. Imagine what this company can do when you have what effectively will be in excess of US $40 million of free cash flow within the junior mining community, where effectively an atomic bomb just went off. There's a lot of good and accretive opportunities that this company can take a look at once we turn this mine back, once you turn this mine on for the first time since the 1920s. And right now it is a ticking clock to get that done, because we are looking at a time frame of somewhere in the neighborhood of 5 to 5.5 months from now, from the point where this company becomes cash flow positive.
Thank you very much, Akiba, and I thank you everyone for your attendance today, and wish you a good evening. All the best. Thanks again.
Great. All right, thank you.